Hi, my name is Doug Thompson, Vice President of Sales at WG National Title Company. Today I'm out here on my office on wheels, driving all over Southern California, interviewing attorneys, real estate specialists, and other resources that you, my clients, are always asking about, providing resources for you to help you close your transactions. Hello, my name is Doug Thompson at WG National Title Company, Vice President of Sales, and today we're joined with Lisa Tyler. She's one of our Senior Vice Presidents at WG National Title. Today we're going to talk about FinCEN, a new regulation that's coming on the real estate world nationally, and will be something we'll have to be reported starting March 2026. Can you tell everybody what FinCEN is?
So FinCEN actually stands for the Financial Crimes Enforcement Network. We have an acronym that we share amongst each other called FinCEN, but it is actually an arm of the government made up of the Secret Service and the FBI and the IRS and the CIA. But they passed a new regulation that becomes effective March 1st, 2026 that will require reporting of all residential sales where the buyer involved in the transaction is an entity that might be purchasing that real estate under the veil of an entity to obscure the actual owner of that entity, their identity, because they might be a drug dealer or a human trafficker that's somehow received ill-gotten gains and using that money to purchase real estate in the United States.
And is that part of the FBI, or who's that? Who does that work? The IRS?
It's the IRS. Obviously for tax evasion, it's the FBI for crime, it's the Secret Service, and the CIA. They all, and even local law enforcement has access to all the information that we report.
Right, so now you've told us what FinCEN is. Who's going to be doing the reporting, and how's that going to work?
So the reporting is actually in a waterfall or cascade that starts with, they call it the settlement agent, which is the generic term for escrow officer or closer, and they are the number one person responsible for reporting, but that waterfall does fall down to titles, so escrow could designate title to report for them, which I feel like in Southern California is the norm. They will have to sign a designation agreement for each and every transaction that title is going to take on the reporting for them.
Okay, so that's probably really important for our independent escrows. A lot of our customers own their own escrows, which is very good. There's also some independents on their own as well. And then there's some title company escrows. So a lot of the ones that aren't through the title company are going to need to designate that. Is that what you think most of them are going to do?
I really do, because the reporting is so invasive and the information collection is so invasive that I feel like that broker-owned escrow and independent escrow will always pass down the responsibility to their title company.
Great. Now, there are certain properties affected. I know that sometimes some of the commercial ones are, but which properties are going to be affected through this?
Any single-family residence, it doesn't matter if it's a co-op or a condo, even mixed use. So think about, you know, my friend Tony owns a liquor store, and he lives in the apartment upstairs, and he's 84 years old. He's going to sell that any time now. When he sells it, he's going to sell it to a business that's going to take over the liquor store. So that's going to be a reportable sale because there's an apartment upstairs. So apartment complexes, mixed use, co-op, condos, and SFRs 1 to 4, all, even vacant land that's intended for single family residence, those are all reportable.
So apartments 2 to 4 units.
Right.
Over 4 units commercial, so those do not get reported.
Correct.
Right?
You are
and
correct.
And then also, what about a farm?
If a farm has a single family residence on, or any type, it could be more than one residence on it, even though you and I would consider that to be an ag sale or a commercial sale,
right.
It doesn't matter the amount of acreage or the sale price, it's still reportable because it has an SFR on it.
That's very interesting. What types of transactions are going to be effective? What makes a transaction reportable or not reportable?
So any sale transaction where the buyer is an entity, let's say a family trust, the Tyler Family Trust, or the Tyler LLC, that's going to be reportable if the property type is single family residence or has a single family residence on it or is intended for use later as a single family residence. Those are all reportable as long as I'm not getting financing from a bank, a mortgage banker, a mortgage broker that has an anti-money laundering program in place. So if the lender has an anti-money laundering program in place, they're responsible for the reporting.
So would that mean NMLS licensed lenders?
Right, exactly.
Are banks different? Are there different types, or is that the main thing they're looking for?
You know what? The government website where you can look up whether or not they have an anti-money laundering program in place is based on their NMLS license number. You're right, exactly.
Now, could you tell me what would happen if there's a corporation that's reporting that's owned by another corporation and maybe even owned by a trust? What happens when that type of transaction?
If that's the buyer,
yes,
then the buyer has to report their authorized signer, which is another corporation, which means they have to report the authorized signer of that corporation, which means they have to report anybody that owns more than 25% of the ultimate buying entity has to report. So let's say it's a partnership that we do business with, an LLC or a corporation, and they have, 3 partners that own 33 and a third, 33 and a third, 33 and a third. All of them have to report. But let's say that they have multiple owners that own, less than the 25%. Then none of them are reported. The only thing that's reported is the entity and the authorized signer or authorized signers if they have multiple, and that's it.
Right. So if there was a partnership going on and one person owned 50% and the other two owned 25%, only the person owning 50% would be the reporting.
No, anybody with 25% or greater. So if the
okay.
other ones own 10, 10, 10, not reportable.
So not 25%, under 25%.
Yes,
okay.
Correct.
That's interesting. Okay, so what about depositors? What about you've got a buyer paying cash, but you might have another depositor bringing money in? What happens with those funds?
So the depositors all have to be reported. So let's say grandma's bringing in money from her account for gift funds. We have to report grandma's name, her address, her social security number, her bank name, her bank account name, and the amount of the deposit and the bank account number. Every depositor has to be reported. They want to know the source of funds.
And what happens if you've got an investor buying with an entity and he's bringing 50% of his own money in, but then he's got investors bringing a big source of deposit into you? How's that handled?
Each one of those investors are depositors. They all have to report their name, address, social security number, and
even if they're not an owner?
Even if they're not an owner, doesn't matter. The depositor information all has to be reported.
Great. Well, that's very interesting. So what we want to do now is talk about what we've done here at actually Lisa has done here at WG National Title Company about getting our customers a seamless, secure, and an efficient process for them to inexpensively do the reporting through our company and assigning it to us.
So we've automated the process as best we can so that we send out a link the minute we identify a transaction as being reportable. We send out a link to the seller and the buyer to collect all the required information. If they don't respond immediately, we actually follow up with a reminder email to let them know that they may be delaying their closing by not providing the required information. It's not information that we require, but information that is required by the federal government. And if they don't respond, then we actually give them a personal phone call to let them know that they can send the link that we sent them, forward it on to a family member or a friend or an attorney to help them complete the information, especially if they're elderly or don't have technology. skills or are non-English speaking, there's a way to get it all done. But we want to get it secure. We don't want to email back a manual form.
So at WT National Title Company, we have a dedicated department, which Lisa's in charge of, that can help our escrows and our customers through the process as well, instead of leaving it on to their own to figure it out. Thanks again for watching our video today. We hope to bring you more in this series of experts in the real estate field helping you with resources to close your transactions.